Markets have had a stellar year, with alternatives or risk-on assets leading the race. Add in an AI frenzy and equity markets have boomed. Over the past 12 months, Bitcoin has returned 107%. Other alternative asset classes have also boasted attractive returns, with global listed private equity, gold, and global listed private credit returning 36%, 22%, and 20% respectively. Comparingly, the most widely held asset class, Australian equities, returned a much softer 13%. So if investors avoided these risk-on assets off the back of the most anticipated recession that never actually happened, they would have missed out. And if we've learned anything from looking back, it's that being selective and diversified is the key to riding the economic cycle. So how do we think alternative assets will perform for the remainder of 2024 and beyond? While central banks globally are gearing up for rate cuts, our view is that US services inflation will prove sticky. The market's optimism for 2 rate cuts by the end of 2024 may be excessive, and instead we believe the Fed's first rate cut will be delayed until 2025. Conversely, European headline inflation has dramatically fallen, nearing central bank targets, and is the lowest among developed markets. We've already seen European central banks cut in June, with further rate cuts expected for the remainder of 2024. These rate cut prospects, coupled with a likely period of low economic growth, could just give investors who overlooked these opportunities a second chance, with tailwinds very supportive of alternative asset classes. The remainder of 2024 is shadowed by election uncertainty in the US and Europe, and rising concerns around debt levels in developed markets. This makes us optimistic on the outlook for gold. Bitcoin is polarizing. However, we are seeing many investors test the waters in hopes of capturing any potential future growth spikes. Notably, investment from institutional investors is accelerating, with $175 billion of Bitcoin currently held. On a similar note, Australian investors are also underallocated to alternative asset classes such as global listed private credit and global listed private equity. Fundamentals are attractive, global listed private credit offers a yield premium, and valuations on global listed private equity are compelling. Want more? You can read our latest portfolio compass, The Alternative Assets Outlook, at vaneck.com.au.